Is a supply shock for XRP actually possible, or is this just another crypto buzzword being thrown around without real meaning? That is the question a lot of people are asking right now, and today we are going to break it down in a way that actually makes sense. Welcome back to BullionIQ, the channel where we talk about crypto like professionals, but in a way everyone can understand. If you are new here, this is where we focus on real market structure, real demand, real adoption, and how money actually flows in this space. And if you are already part of the BullionIQ community, thank you for coming back. Your support means everything to this channel, and I truly appreciate every like, every comment, and every subscription. Right now, a lot of people in the XRP community are saying that a supply shock is inevitable. They believe ETFs, institutional demand, and long-term holding are going to drain available XRP so fast that the market will be forced to reprice the asset much higher. At the same time, there are others who say a supply shock is not even possible, that XRP has too much supply and will always be available. So which side is right? In this video, we are not here to hype. We are here to analyze what a supply shock actually means, whether it can happen to XRP, and what the current market data is really telling us. Before we go deep into that, let me quickly say this. If you ever need a place to buy XRP, I always recommend using a trusted exchange. And more importantly, I always encourage you to take custody of your crypto if you are holding long-term. But today, let's focus on the bigger picture. Because what we are seeing in XRP right now is not just another small price move. We are breaking key levels, and that matters a lot for what could come next. Now, I want to address something that has been floating around in the crypto space lately. You might have seen people comparing blockchains using random metrics like TVL, transactions per second, or other numbers that sound impressive but don't always mean much in real-world usage. Recently, some have said XRP is overvalued because its market cap does not match its TVL compared to other chains. And I want to be very clear here. That argument completely falls apart when you apply basic logic. If TVL alone determined value, then Bitcoin should be worth nothing, because Bitcoin has essentially zero TVL, and yet it is the largest and most trusted cryptocurrency in the world. The reality is, just because a blockchain has high TVL or high transaction numbers does not mean it deserves a higher valuation. If the money on a chain is sitting idle and not being used, it does not create real economic value. If transactions are just spam or meaningless activity, they do not reflect real adoption. So when people try to push new chains as XRP killers based on surface-level metrics, you have to be careful. Technology alone does not win in financial markets. Trust, history, regulation, and institutional relationships matter far more. This is where XRP stands apart. It is not just another new blockchain with impressive numbers on paper. XRP has a long track record, real-world integrations, deep liquidity across global corridors, and relationships with financial institutions that took years to build. These things cannot be copied overnight. You can launch a new chain tomorrow with faster speeds or higher capacity, but without trust and adoption, it means very little. That is why XRP continues to remain relevant while so many other projects fade away after the hype dies. Now let's move into the main topic, the idea of a supply shock. A lot of people are sharing charts that show XRP leaving exchanges at a rapid pace. According to on-chain data, large amounts of XRP are being withdrawn from trading platforms. Many are saying this is because ETFs and long-term investors are absorbing supply. Others argue that this data does not include every exchange, so it cannot be trusted. But here is the key point. If we see the same trend across many major exchanges, it is reasonable to believe that a similar pattern is happening elsewhere. So what is really happening here? When the market dipped, many investors saw it as an opportunity. They bought XRP at lower prices and moved it off exchanges into private wallets for long-term holding. This is a classic sign of accumulation. People are not buying to flip for a small profit. They are buying because they believe in higher future prices. This behavior alone does not automatically create a supply shock, but it does set the foundation for one. To understand supply shock, we first need to define it in simple terms. A supply shock does not mean that XRP will completely run out or become impossible to buy. That is not realistic. What it really means is that at certain price levels, there is not enough willing sellers to meet rising demand. When demand grows faster than available supply at a given price, the market has only one solution. Price must move higher to unlock new supply. Think about it this way. Many XRP holders today are not willing to sell at current prices. They believe XRP is still early. But ask yourself this. Would some people sell at $20? Probably. At $50? Even more? At $200? Almost certainly. Every higher price level brings new sellers into the market. That is how markets function. Price is not just a number. It is the mechanism that releases supply. So when people talk about a supply shock in XRP, what they really mean is this. New demand is entering the market through ETFs, institutions, and broader access. At the same time, a large portion of holders are refusing to sell at current prices. This imbalance forces the market to reprice XRP upward in order to find sellers. That is not speculation. That is basic supply and demand. Let's go deeper into what is driving demand for XRP and why this situation is different from most other cryptocurrencies. A lot of people assume demand only comes from retail traders, but what we are seeing with XRP right now is something much bigger. We are seeing new access points opening for investors who were never able to buy XRP before. This includes institutions, funds, and people who simply do not want to manage private wallets or deal with exchanges directly. When new financial products like ETFs enter the market, they create entirely new lanes of demand. Think about it this way. Before ETFs, if someone wanted to buy XRP, they had to create an exchange account, go through verification, move money, and then actually place a trade. For many traditional investors, that process is too complicated or outside their comfort zone. An ETF changes that. Now, XRP exposure can be purchased through regular brokerage accounts, retirement accounts, and institutional portfolios. That means demand is no longer limited to crypto-native users. It expands into the traditional financial world. And when you open new doors for money to flow in, demand does not grow slowly. It grows in steps. At the same time, we have to look at the behavior of existing XRP holders. One of the most important factors in any supply-demand equation is not just how many coins exist, but how many are actually available for sale at current prices. XRP has a very unique holder base. A large percentage of the community is not trading for short-term profits. They are holding with a long-term vision tied to adoption in payments, liquidity, and global financial infrastructure. That creates what we call sticky supply. These holders are not easily shaken out by small price moves. This is very different from many other altcoins, where most participants are simply looking for the next pump. In those markets, when price rises 20, 30, or 50%, large numbers of people immediately take profits. That creates constant selling pressure and keeps price from running too far too fast. With XRP, the psychology is different. Many holders believe that selling too early means missing the real value of the asset. As a result, supply at lower and even mid-level prices becomes very thin. Now let's connect that to the idea of a supply shock. If you introduce new demand through ETFs, institutions, and broader access, while at the same time the majority of existing holders are unwilling to sell, what happens? The market starts competing for fewer available tokens. Buyers are forced to bid higher prices to convince sellers to part with their XRP. This is not about hype. This is about basic market structure. When demand increases and available supply does not, price has to adjust upward. Some people argue that XRP has too large of a total supply for this to matter, but that argument misunderstands how markets work. Total supply is not the same as circulating or available supply. A large portion of XRP is locked in long-term holdings, cold wallets, or strategic reserves. What actually matters is how much XRP is actively being offered for sale at any given price level. If only a small percentage of holders are willing to sell at $2, $5, or even $10, then effectively the available supply at those prices is very limited. This is where the concept of price unlocking supply becomes critical. At low prices, almost no one wants to sell. As price rises, some holders decide to take partial profits. At much higher prices, more sellers appear. The market uses price as the tool to bring new supply into circulation. That is why a supply shock does not mean there is no XRP left. It means that at current prices, there is not enough XRP available to satisfy demand, forcing price higher until new sellers emerge. Let's use a simple example. Imagine there are 1 million buyers who suddenly want to own XRP through ETFs and long-term investments. But at the current price, only a small group of holders are willing to sell. Those buyers start competing with each other. Some are willing to pay more. Others follow. Eventually, price rises to a level where new sellers finally say, okay, now it makes sense for me to sell some. That is how a market finds balance. But during that process, price can move very quickly. Another important point is how long-term conviction affects this dynamic. In many crypto projects, conviction is weak. People like the technology, but they do not see it as something that will reshape global finance. With XRP, a significant portion of the community believes in a much larger endgame. They are not waiting for a small rally. They are waiting for structural change in how money moves across borders, how liquidity is managed, and how institutions settle transactions. That long-term belief reduces sell pressure at almost every price level. This creates what I call a compressed spring effect. Demand keeps building from new sources, while supply remains locked by long-term holders. Eventually, when price begins to move, there are not enough sellers to slow it down. This is when markets experience sharp revaluations, not because of hype, but because the market structure cannot handle the imbalance. We also have to understand that ETFs do not behave like retail traders. ETFs accumulate systematically. They buy according to inflows. They do not panic sell on small drops. If money keeps flowing into these products, they will keep absorbing XRP regardless of short-term price fluctuations. This creates steady, consistent demand that does not disappear when the market gets volatile. And that kind of demand is exactly what can trigger long-term price revaluation. At the same time, XRP's role in cross-border liquidity adds another layer. If usage grows for real settlement and liquidity purposes, that creates transactional demand, not just investment demand. That means XRP is not only being held, it is also being used. And when an asset is both held long-term and used for real economic activity, supply tightens even further. So when people ask, is a supply shock for XRP even possible? The honest answer is this. A complete disappearance of supply is not realistic. There will always be someone willing to sell at some price. But a rapid tightening of available supply at current prices is absolutely possible. And when that happens, the market does what it always does. It reprices the asset upward until supply and demand come back into balance. It is time to connect everything to what the market is actually showing us. Because in crypto, fundamentals tell you the why, but price action tells you the when. And right now, XRP's structure on the charts is one of the most interesting setups in the entire market. One of the most important tools I use when analyzing any cryptocurrency is the ratio against Bitcoin. This is not something many retail traders focus on, but it is critical if you want to understand relative strength. When an asset is gaining against Bitcoin, it is not just going up in dollar terms. It is outperforming the entire crypto market. That is when real leadership begins. If we look at XRP against Bitcoin, what we see is not random movement. We see a long period of consolidation that has been forming since late 2024 and into 2025. Price has been compressing into a very tight range, bouncing between support and resistance again and again. This type of structure does not happen by accident. It represents a market that is building pressure. Buyers are stepping in at higher lows, while sellers are defending a certain level. Eventually, one side must give way. This kind of pattern is often called coiling. Think of it like a spring being compressed. The longer the market trades in this tight range, the more energy builds. When price finally breaks out, the move is usually not small. It is fast, directional, and often catches most people off guard. That is why this XRP structure is so important. It is not just noise, it is the market preparing for a major decision. Now, are we already breaking out? It may be too early to say with absolute certainty. We could still see a final shakeout or some sideways movement. But what matters is that the structure is intact and the probability of a significant move is increasing. When you combine this with the demand dynamics we discussed earlier, you begin to see how a technical breakout can align perfectly with a fundamental supply squeeze. Let's go a step further and talk about what this could mean in real price terms. When analysts project future prices, it is not about guessing or hoping. It is about using historical relationships and market behavior. One common approach is to look at where XRP has traded against Bitcoin in past cycles and then apply that ratio to future Bitcoin prices. Historically, XRP has reached much higher ratios against Bitcoin than where it trades today. If XRP were to simply return to those historical levels, even without exceeding them, the dollar price would increase significantly. For example, if Bitcoin were to reach levels such as $200,000 to $250,000 in a future cycle, and XRP were to trade at its previous peak ratio against Bitcoin, that would mathematically place XRP in the range of roughly $40 to $50 per coin. And that is not based on speculation. That is based on simple ratio analysis. Now, some people hear numbers like $40 or $50 and immediately say it is impossible. But here is what most fail to realize. XRP has already made moves of that magnitude in previous cycles in percentage terms. The only difference is the base price was lower at the time. Markets do not care about round numbers or what feels too high. They respond to supply, demand, and structure. If demand accelerates and supply remains locked, the price has to adjust regardless of how extreme it may look on the surface. When we zoom out to longer-term charts, especially on a logarithmic scale, something very interesting appears. XRP's previous major rallies were far more aggressive than what would be required to reach the $40 to $50 zone from current levels. In other words, history shows that XRP is fully capable of making large, fast moves when conditions align. The current consolidation looks very similar to periods that preceded major breakouts in the past. Now let's bring this back to the idea of a supply shock. A technical breakout does not happen in isolation. It is the result of underlying market forces. If ETFs and institutional channels continue to absorb XRP, and if long-term holders remain unwilling to sell at current prices, then any breakout can be amplified. Once price starts rising, new buyers rush in, momentum traders jump on the trend, and media attention increases. At the same time, supply remains limited because most holders are still waiting for much higher levels. This creates a feedback loop where rising prices create even more demand. This is how markets move from slow accumulation to explosive revaluation. It does not happen in a straight line. There will be pullbacks, volatility, and moments of doubt. But structurally, when an asset breaks out of a multi-year consolidation with strong demand behind it, the upside potential is often far greater than most expect. Another key factor is psychology. As price moves higher, something changes in how people view the asset. At lower prices, many investors are hesitant. They question whether the move is real. But once key levels are broken, confidence grows. Long-term holders become even more convinced they are right. New participants begin to believe the story. At the same time, short sellers and skeptics are forced to exit their positions, which adds even more buying pressure. This is not hype. This is how markets transition from disbelief to acceptance. We also have to consider the absence of strong selling pressure. In many other cryptocurrencies, large holders, early investors, or insiders often use rallies as opportunities to exit. This creates heavy overhead resistance. With XRP, a large portion of the community is not looking to exit on the first major move. They are waiting for the broader vision to play out. That means rallies are less likely to be capped by massive profit-taking, at least in the early stages. When you combine all of this, the picture becomes clear. You have a market that has been consolidating for a long time, showing signs of technical readiness. You have new channels of demand opening through ETFs and institutional access. You have a holder base that is not eager to sell at current or even moderately higher prices. And you have historical precedent showing that XRP is capable of large moves when conditions align. None of this guarantees a specific price. Markets always involve risk. But what it does tell us is that the conditions for a powerful move are forming. This is not about hope. It is about structure, behavior, and probability. Price alone does not determine supply. How holders think, what they believe, and their willingness to sell at certain levels all shape how supply behaves. And this is where XRP stands apart from most other cryptocurrencies. The community is not made up of traders chasing quick gains. Many are visionaries who understand the long-term purpose of XRP and its role in global finance. That mindset directly affects supply dynamics. Think about it. In most crypto markets, when price rises 20, 30, or 50%, early investors often take profits. This is natural and keeps the supply flowing. But XRP's holders act differently. Many purchased XRP not just to flip for a short-term gain, but because they believe in its adoption for cross-border payments, institutional use, and financial infrastructure. They see XRP as a tool, not just a speculative asset. This belief makes them far less likely to sell at intermediate price points, even when others might be tempted. That reduces available supply and creates a very different market environment. This long-term conviction has another important effect. It encourages patience and confidence in the market. When investors see other holders holding, it reinforces their own willingness to stay invested. It also creates a type of herd behavior, but not the panic selling type. It is a herd behavior built on conviction. Everyone is watching the same story unfold, and that collective mindset strengthens the market's ability to absorb demand without immediately flooding the exchanges with supply. Another way to look at it is by comparing it to traditional investments. Consider Amazon in its early years. Many investors could have sold their shares after the website launched or after a first major earnings report. But those who stayed long-term ended up capturing the full value of the company as it became a global powerhouse. XRP's community behaves in a similar way. Many holders are thinking in terms of years, not months. They are willing to see XRP reach levels that may seem extreme to others because they understand the vision and adoption story behind it. That patience is critical for a supply shock to occur. Now let's link this directly to market mechanics. A supply shock happens not when coins vanish, but when they become temporarily unavailable at the current price. If most holders refuse to sell and new demand enters the market via ETFs, institutions, or new investors, the available XRP shrinks. Buyers start competing for the limited supply, and price naturally moves higher. The higher price then encourages some sellers to release tokens, but the process takes time. That is exactly what creates a shock. The market reacts rapidly to demand imbalances before supply can fully adjust. What makes XRP unique here is the size and conviction of its holder base. Other cryptocurrencies may see sudden rallies, but they are often capped by short-term sellers or speculators. With XRP, the holders are more aligned with the long-term vision. They are less likely to sell on a temporary spike, which means price can move more freely without immediate resistance. Combine that with growing institutional participation, and you have a setup where supply tightens while demand continues to build, a perfect environment for a supply-driven repricing event. It's also important to consider how retail and institutional behaviors interact. Retail buyers often follow trends and narratives, jumping in when they see price movement. Institutions and ETFs, on the other hand, tend to accumulate steadily and do not react emotionally. When these two types of participants enter the market together, the effect can be amplified. Retail reacts to the early price action created by ETFs, further reducing available supply as more tokens are moved off exchanges into long-term wallets. This compounding effect can accelerate price increases much faster than many traders anticipate. Another interesting aspect is that this type of supply shock is self-reinforcing. As price rises, media attention increases. People who were previously undecided begin to buy. The XRP community's conviction continues to hold supply steady. This means price is pressured upward until new supply is gradually unlocked at higher levels. Unlike other coins where selling pressure appears as soon as price starts moving, XRP's market is uniquely positioned to allow strong upward moves before significant resistance appears. Finally, let's remember that markets are driven by human behavior just as much as by fundamentals. Technology alone does not determine price. XRP has been around for over a decade. It has partnerships, adoption, liquidity corridors, and a dedicated community. All these factors combine with the psychology of long-term holders to create the conditions necessary for a supply shock. It's not about scarcity in absolute terms. It's about scarcity at the current prices, paired with rising demand. That is what can drive a sustained revaluation and technical structure. Let's put it all together and talk about what this could mean for XRP in real terms. When you combine these factors, a clear picture emerges. The market is creating conditions for a supply-driven revaluation. This doesn't mean XRP will suddenly skyrocket overnight, but it does mean that at current prices, supply is tightening while demand continues to grow, which almost always leads to upward pressure on price over time. The first thing to remember is that XRP is not just any cryptocurrency. It has institutional relationships, liquidity across multiple corridors, and a proven track record. These are the kind of structural advantages most newer coins do not have. They cannot be replicated quickly, so when new demand enters the market through ETFs or other channels, XRP's ability to absorb that demand without increasing supply makes it fundamentally different. The coin is being pulled into wallets, not being dumped back into exchanges, which increases the scarcity at existing price levels. On the technical side, XRP has been in consolidation for a long period. We discussed how the price against Bitcoin is coiling, building pressure. When combined with real-world demand, this is exactly the type of setup that leads to breakouts. Historically, when XRP has broken similar patterns, the resulting moves have been significant. This tells us that the market structure is aligned with the fundamentals, and both are pointing in the same direction: higher prices. Holder psychology plays an equally critical role. Unlike many other altcoins where investors sell quickly at minor gains, XRP holders tend to be long-term believers. They understand the broader vision of Ripple and XRP's role in cross-border liquidity. This creates a scenario where very little supply is released at lower to mid-range prices. When buyers enter the market, they encounter resistance not from sellers, but from the natural scarcity created by holders' conviction. This is the essence of a supply shock. It's not absolute scarcity. It's scarcity at current price levels. Now, what could this mean in terms of numbers? If we combine historical ratio analysis with possible Bitcoin price projections, XRP could reach levels that seem high to the average trader, but are actually realistic. For example, if Bitcoin approaches $250,000 and XRP returns to its previous highs relative to Bitcoin, the dollar price could land between $40 and $50. That is not fantasy. It is based on simple math and historical precedent. Add the supply constraints from long-term holders and ETFs, and those price levels could be reached more quickly than many expect. Of course, markets are never perfectly predictable. There will always be short-term volatility, corrections, and unexpected events. That is why it is important for investors to focus on the broader trend and not get caught up in every minor move. A supply-driven price move is typically not linear. There may be pullbacks, consolidation phases, or moments of hesitation. But as long as the underlying fundamentals, demand, holder conviction, and adoption remain intact, the long-term trend is likely to continue upward. Another point worth mentioning is the role of institutional and ETF accumulation. Unlike retail traders, these participants tend to buy consistently and hold, regardless of short-term market swings. This steady demand reduces the chances of a sudden sell-off that could disrupt the market. In other words, institutions act as a stabilizing force while simultaneously creating scarcity at current prices. When combined with retail buying that reacts to price movement, this forms a strong reinforcing loop that can push prices higher without the usual resistance seen in other altcoins. It's also crucial to understand that XRP's market behaves differently from pure speculative coins. Many altcoins experience massive pumps only to collapse because holders are willing to sell at small gains. XRP's community, however, is aligned with a larger vision. They are willing to wait, even as the market experiences higher prices. This patient behavior is what allows a supply shock to manifest and a revaluation to occur. It's not hype. It's a structural feature of the XRP market. So, for anyone watching this and thinking about entry points, the key takeaway is this: look at supply, demand, and conviction, not just price. XRP is unique because a lot of the available supply is effectively off the market due to long-term holding, while new demand is steadily coming in. This combination is what can create strong upward moves. Short-term dips may occur, but they are unlikely to change the overall trajectory, unless there is a fundamental shift in adoption or institutional participation. To summarize everything we've discussed across these 5 parts, a supply shock for XRP is not about running out of coins, it is about scarcity at current prices, driven by high demand from ETFs and institutional channels and low willingness to sell from long-term holders. Technical analysis shows price coiling and building pressure. Historical ratios and future Bitcoin projections indicate that $40–50 XRP is realistic in a strong market cycle. And psychology confirms that the holder base is patient and aligned with the long-term vision, making rapid supply release unlikely at mid-range prices.